Today's edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We're at the Farm Progress Show indicator. Meantime, that this is the Markets Club podcast for the Farm Progress Show edition. We were talking about the fundamentals with these grains markets with the yield trends for today's market with Bruce Blyth from Farm Futures and Connor Bridgman from AgMarkets as well. And with Bruce Blyth from Farm Futures, Arlan Sudermmann from Stonex Financial Services about the Commodities Index from the Farm Futures. This is the Markets Club podcast for the Farm Progress edition. We're at the Farm Progress Show indicator. Meantime, that this is the Markets Club podcast for the Farm Progress Show edition. We were talking about the fundamentals with these grains markets with the yield trends for today's market with Bruce Blyth from Farm Futures and Connor Bridgman from agmarkets.net as well. And with Bruce Blyth from Farm Futures about the Commodities Index from the Farm Futures. Arlan Sudermmann from Stonex. Hey, Bruce and Connor. Arlan, welcome to our discussion on today at the Farm Progress Show. Great to have you guys on today.
Yeah, appreciate you having me. Nice to meet you in person. Oh, yeah, hey, thanks for having me, Caesar. Great to meet you in person.
Good to be here, Caesar. Good to see you at the Farm Progress Show.
Yes, good to meet you, Caesar. It's really great being here. Thank you for having me on your show.
I'm starting to our conversation with Connor for today. Can you tell us what's silver view of the August report on the beans demand?
August report, right, it was definitely a shock. And in terms of soybeans, right, just the amount of acres that they took away from soybeans, right? The big headline is that they added 97 million acres of corn. Well, that means we took 2.5 million acres away from soybeans, right? It changed it very quickly. And we saw a nice, off the top of my head, I'm going to say 60, 70 cent run up these past couple weeks in soybeans, right? Pulling back a little bit. And if we talk soybean demand, the USDA report, it felt good, but we still really need to see some form of export demand, right? And that's going to be China. We're going to have to see some form of buying. I think that's why we're pulling back a little bit here, right? We're kind of hitting that. So.
What is your position on this report from the market, Connor?
Yeah, speaking from the USDA report again, it was kind of a shock, right? Just looking at corn, they raised the bushel, at the top end of estimates. Some estimate people were there at that 188.8, but then on top of that, adding 2.5 million acres. So now we have a yield that's 10 bushel above the previous record, and then also 2.5 million acres of corn. It very much flipped the balance sheet. Now, what's interesting is that what we're seeing now here at the Farm Progress Show is that December corn still has a 4 in front of it, right? We haven't quite seen that major sell-off, so I think most are kind of discounting that big USDA yield. So it's going to be interesting to see when combines start rolling what we're going to come across.
How about you, Chief?
Well, I think we need to put the USDA report on August 12th into perspective. This is very much a money-driven market, and the funds have millions and millions and millions of dollars invested into commodities. And so if they're going to invest that much money, they're going to have the best yield models that money can buy. You may not like yield models, but it's a reality of how today's markets operate. And those yield models have been showing yields in the upper 180s to around 190 bushels per acre for some weeks before that report. So that's what the funds have been trading. The only surprise was the change in acreage. So they quickly priced in the acreage surprises on that first day. And then corn market's been higher ever since, essentially, trading above that level. So it's traded the maximum size of the crop. And even the soybean traders, I think, have traded the maximum size of the crop. They don't expect it to be much bigger than it is. And the history with USDA is that big crops tend to get smaller. And the month of August certainly has not been favorable to crops. We've been dry, we've had a lot of disease, and so I think we are seeing yields come back. So now the focus is on demand. USDA, I think, rightfully increased ethanol demand for corn. We're going to have strong exports, but they raised feed usage as well. They raised all of those that raised feed usage, and frankly, with the border with Mexico closed to feeder cattle coming north, the number of cattle in our feedlots, I think USDA is too high in the feed usage number, but other demand should be strong. But when we look at soybeans, I think there's an assumption that our domestic demand will be strong. We'll be running crushers at maximum capacity, and that's factored into the market. The big question is going to be exports, and as was said, does China buy any soybeans from us? When do they buy soybeans from us? And if they do buy, how many do they buy? And that's still a big question mark, and it's getting very late to get some type of a trade deal for them to buy. They've been replacing a lot of that demand out of South America.
Do you have any concerns about the corn markets, Arlan?
I think the biggest concern I have for the corn market now is in the cash basis area more than the board. We have to find a home for these crops. They're not as big as they were, but they're still big crops. And when you put that on top of a big wheat crop, and the fact that we still don't have any business with China for soybeans, you look at the western Midwest, some of those rail markets that normally ship beans to the Pacific Northwest to ship to China, they just don't have a bid for beans. So those beans that would normally be quickly shipped out have to find storage home, and that's just going to amplify our storage problems that much more. So we already have very weak basis in that area, and that's having an impact on basis further east as well in the eastern Midwest. And I think that's the next problem we have to get through. Once we find a home for all those bushels, then that basis can improve. Then we may get some modest improvement in the board. But until then, I think the cash market's going to really struggle until we can find a home for every bushel.
Of course, the trade is pretty tough for right now. Arlan, how are things in the fundamentals on the grains markets?
Fundamentally on the grain markets, I think the biggest question mark is China, and are they going to buy soybeans? Domestic demand is going to be very strong with the biofuel industry growing. We've got a very good biofuel program, I think, right now. That's going to be good, but we have to build crush capacity in order to create demand, and that's going to take some time to do so. Exports are the big question mark. If we do get a trade deal with China that requires them to buy a sizable amount of soybeans, then soybeans could turn very bullish. But I'm just not going to go there until I see that because there's a lot to be worked out. On the corn side, I think we're going to continue to see strong demand. Not as strong as what USDA has, but I think the combination of a smaller crop than USDA first announced and the reduced demand, I think we'll still end up having decent corn fundamentals, not something that maybe justifies going to $6 corn anytime soon, but at least give us some volatility, to give us some pricing opportunities, hopefully some improved basis, and we can also take advantage of the carry in the market as well to also enhance our pricing opportunities.
Bruce, do you find this interesting to the grains markets for right now?
Well, I find the grain markets interesting all the time, but yes, things are particularly interesting now. As my friends here indicate, that there's a lot of skepticism that came out of that August 12th USDA report for both corn and soybeans. There's a feeling in the trade that maybe we've seen the peak yield at just shy of 189 bushels an acre. You hear reports it may be closer to 185, maybe even low 190s. So yeah, that is being reflected in trade, and you've seen both corn and soybean futures rally here a bit in the last couple of weeks, although they've kind of lost steam this week. But again, it's very early innings. We've got four more crop production reports coming up here before all is said and done. The next one is September 12th. I think that will be a key influencer for corn and soybean prices. A lot of the corn was planted very early this year. I think we're going to start to see some early harvest results too. Certain parts of the Midwest, those will be closely followed. So this story is far from being written, and I would concur with my colleagues here that demand is crucial, especially from the export side. Demand profile for both corn and soybeans is pretty strong. You got record crushing 2 years in a row, record corn exports 2 years in a row. But again, what's China going to do, especially with soybeans? So we really have to keep a close eye on that, and that's going to be an influencer into the fall.
How about the biofuels demand for the beans, Bruce, from your research?
Well, I think the biofuels are, a strong demand pillar for both corn and soybeans. You've got near record ethanol demand last year and this year. You've got record crushing shaping up for the second year in a row. New crushing facilities coming online quite a bit here in the last year or so. And the Trump administration appears to be supportive of even higher biofuels blending mandates. We had the news on the RINs last week that was perceived as bullish. So I think the biofuel side, Arlan could probably talk more authority on this than I am, but the biofuel side would appear to be bullish or at least supportive for soybeans and corn. Now, there's caveats there, including, electric vehicles and, the longer-term profile for gasoline use. So it gets complicated quickly, but yeah, I think on the surface you can argue that biofuels are a reason farmers can be encouraged right now.
Do you guys agree with Bruce about biofuels?
Yeah, we still don't have the final blending requirements from the EPA, but every decision from the Trump administration thus far during this administration has been farmer friendly on the biofuels. We anticipate that's going to continue. Our sense is right now, even if there are no offsets, it's still bullish demand for the feedstocks, and that's a positive. And so any offsets we get, and it looks like there will be some, simply add to that. The big question mark is what EPA will do. Their initial suggestion or proposal was for foreign feedstocks to get just 50% credits on the RIN market. That may be changed because we simply don't have enough feedstock in the United States right now with our limited crush capacity to be able to meet all the demand for the RVO. So I do think that they'll probably open things up more for foreign feedstock over the next 2 years.
How about you, Connor?
Yeah, I think Arlan hit the nail. He hit the nail on the head, right, when we're talking biofuels. The only thing I'll say is that a year ago, 2 years ago, I feel like there was a little bit more euphoria with how fast that industry was going to change, right? It's a little bit slower going, right? It felt like it was going to stall, but now we've got definitely some really good news. So, hopefully it just keeps going.
Sure. What was your thoughts with the yield is higher from the Department of Agriculture? Do you have any thoughts on it, Arlan?
Yes.
Both?
Me.
You need to say the name.
Oh, he did. He did.
Oh, good.
Yeah, we need to remember that USDA yield was based on a survey done around August 1. And on August 1, the crop looked really good. USDA also takes in consideration satellite data, and the satellite data was record high for that time of year for the 2000s. So that's why we had the big yield generated there. But since then, I think the crop has gotten smaller, and that kind of fits what we've seen in recent years, really. This will be the fifth out of the last 6 years, I think, where we finished off the season drier and taken some yield off after the initial estimate, and this looks like it'll be the same.
How about a technical buying from the Midwest Crop Tour?
Well, I think when you look at the Midwest Crop Tour, that came in, that was basically 3.5 weeks after USDA surveyed yield, so a lot had changed that over that period of time. Now, that Midwest Crop Tour historically, usually about 70% of the time, comes in below USDA final yield. They use a different methodology, different tour routes and everything. So when you look at it from that standpoint, you have to compare the crop tour results to previous years for them and compare USDA results to previous years for them. So when you put them together, I think this is a big crop, just not as big as it was on August 1st. Now the question is, how much lower from that August 1 yield? And that's going to depend on how we finish off here with disease and with the dryness across the Midwest.
Well, you guys know that we were seeing the harvest season in central Illinois, but it's pretty good for the corn and beans. I want to go to have Bruce Blyth from Farm Futures about the fundamentals on the old crop. What is your knowledge of the old crop on the fundamentals from your report from Farm Futures?
Well, if we're talking about old crop corn, we're looking at, I would say, at least mildly bullish fundamentals. You've got ending stocks, also that came out on August 12th, but didn't quite generate the attention, but the USDA cut its ending stocks for corn to close just above 1.3 billion bushels, and that's a 4-year low. So, again, that reflects the strong demand we've been talking about, strong exports, record exports, strong biofuels use, strong feed use. So yeah, supplies, at least right now, and we're just a few days from the close of the 24-25 crop year, yeah, you could argue that corn supplies are a little snug. And, but if you look at the futures, it doesn't necessarily reflect that. The futures are trading that 16 billion plus crop we think we've got coming. But yeah, I would say old crop, for what's left of it, what's left of the year, is pretty firm. But again, we're moving into the 25-26 marketing here in just a few days, and I think that's what trade is looking at. And soybeans ending stocks this year are a little bit higher, about 330, excuse me. Next year's soybean ending stocks are expected to shrink to 290 million bushels, according to USDA. So that's a little tight as well, and that's, I think, kind of given the bean market a bit of a bid lately. But again, we've got these same questions over demand, specifically exports in China, that are sort of hanging over the market, and that's what I think trade is fixated on. One of the things it's fixated on right now.
What is the numbers from Stonex and agmarkets.net?
Well, our August 1 yield was pretty much where USDA found it as well, at about 188 bushels per acre of corn and 53.6 bushels for soybeans. And that's what USDA found from there.
How about you? What is your thoughts with it, Arlan?
The cattle market has been amazing this year, unprecedented with the record highs. And so the bottom line on the cattle market is always, what is the consumer willing to pay? We know supplies are tight, but once prices get too high, the consumer is going to move down the value chain to pork and poultry. And we simply have not seen much of that yet. Even though consumer sentiment has been very weak in this economy, the consumer has still been buying beef. They like the protein and they like their beef, and that's really surprised me.
Do you have any concerns about this fall on the deferred contract on the cattle markets, Arlan?
Fundamentally, we should remain tight for a while, but with so much speculative money into the markets, you're always vulnerable for a sharp pullback if something scares them out of the market. You know, some type of a headline that could scare them about beef or something like that, scare them out. That's the risk that we always face. And so I think the prudent individuals in the industry are continuing to use protection in the marketplace, managing their risk exposure. But we're going to be tight on supplies for quite some time. One of the factors to keep watch on is, do we at some point lift the 50% tariff on Brazil beef? That could increase the supply of beef into the United States significantly. And that's a political decision that we simply don't know, but that would be one of the risks to watch going forward.
What is on the cattle on feeds from last week, Arlan?
Yeah, the cattle on feed report continued. It did show a little larger supplies than what was expected, but they're still very tight, basically the tightest in years. And it's largely because, first, our cow herd size in the United States is tight. If you can sell a heifer today, a young heifer, for $350 per hundredweight as a feeder, or take it through the feed lot and sell it for $245 per hundredweight, versus saving it for your breeding herd and getting your return on your money 3 or 4 years from now, it's awfully hard not to sell it now. So that's going to stay tight. But overall, the big thing is the Mexican border being closed, preventing those cattle from coming north. If that opens at some point, that dramatically increases the supply of cattle in the United States. But frankly, I don't expect it to open anytime soon due to the New World screwworm that continues to be a risk for the U.S. industry.
Do you have it? Finally, what is your thoughts on the corn estimate from the growing season?
Boy, well, I mean, if we're talking the 2026 growing season, that seems like a long ways away right now. A lot's going to happen before then. But I think, if we are looking at a 2 billion bushel plus carryout and depressed corn prices, sub $4 a bushel or whatever, below the cost of production, then you have to start thinking we're going to see a pretty sizable shift away from corn acres. I don't know what that number is. It could be a few million, but we had over 97 million acres planted to corn this spring. That's a 13-year high. and I'd have to think we're going to see some kind of pullback next spring, and maybe some move back into soybeans or something else. But yeah, next planting season is going to be very interesting. Let's put it mildly, and we got a lot to get through before then. So,
how about you guys start with Arlan?
Okay.
Growing season, I think.
Yeah, as we look at next year's growing season, I do look for a pullback in corn acres. That's assuming that we end up getting some export business with China. Now, we're going to have export business with other countries. China is so dominating Brazil's ports that some other countries who normally would get beans from Brazil are coming north to the United States. So we're going to pick up some business, but we still need to do some business with China. And if we do, you combine that with the domestic demand, I think that soybeans will steal some acres back from corn, a few million acres of corn, particularly if fertilizer prices stay high for corn. But overall, I think there's a lot of apprehension about the 2026 crop year. Farmers are going to plant because they're optimistic that we'll get opportunities that'll eventually come. That's what keeps them into business through hard times, is that optimism. It's just, what will the crop mix be? But right now I'd have to say I expect some shift from corn to soybeans next year.
Connor, what is your final thoughts on our conversation for today?
Well, number one, thanks for having me. Again, nice to meet you in person. Nice to meet Arlan and Bruce as well. Final thoughts, for the producer, harvest is going to start here for a good chunk of guys next week in Central Illinois. It's going to, and then, the vast majority are going to be going here in, probably 3 weeks to a month, maybe sooner. It always happens sooner than I think. And so that's going to be the focus, right? No one likes the flat price. What can we do to get through this harvest, right? If we don't have the bins, if we know we need to cash fall stuff before 2026, how are we going to do that, right? And make it through there, right? And so that's the focus as much as anything.
Thanks for coming over for today at the Farm Progress Show. We've been talking to Connor Bridgman from agmarkets.net and Bruce Blyth from Farm Futures, Arlan Sudermmann from Stonex, on this Markets Club podcast at the Farm Progress Show Indicator.
Yeah.
all right, good job.
Thank you, Cesar.